Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Thursday, 9th day of May, 2019, and this is the Daily Report for Gold and Silver. While trade negotiations have gotten underway Thursday in Washington between the Chinese and United States delegations, the threats of higher tariffs and retaliation by the Chinese, if in fact that happens, are just about 12 hours away from actually being initiated. 12 midnight is the end of the countdown clock. While I believe that puts a deeper chasm in terms of any kind of a favorable outcome, anything can happen during these negotiations, although it is hard to fathom that after months of hard negotiations, this 2 days will get these superpowers closer together. That has put continued pressure on U.S. equities, global equities, and has seen gold be supported by the safe haven aspect of that precious yellow metal. Gold today gained about $3.40, is currently trading at $12.8480, and is in fact the only precious metal in the complex to exhibit firmer pricing. The remainder, silver, platinum, and palladium, all trading lower on the day as their industrial components begins to show. Silver, for example, lost about 10 cents, 0.7% at $14.76. Platinum sold off by about 1.5%, $851.40. That's down $13. And palladium also trading over 8% lower at $12.8890. As I spoke about yesterday, it seems as though the price levels between palladium and gold are coming closer and closer together. We'll talk about that a little bit, but we'll focus in on gold and what our current trade evaluation is, as well as our exit strategy on today's show. Let's take a look at our technical studies. Traders, modest gains today in gold futures, with gold currently trading at approximately a $12.8520 to about $12.8540. That is in aftermarket action at the Globex. What we can say as we look at this chart is that it is most noteworthy that we have had prices firming. We can see a defined ascent in terms of pricing off of these lows that existed at the 0.50% retracement level. And at the same time, we must acknowledge that we have seen some real resistance at the 0.38 level, which occurs at about $12.8680. Traders, I did modify the start and ending points of this particular data set, in that we're starting at about 1184, a little bit lower than before, and of course we're ending at the same place, but it seems to give us a more accurate depiction of current levels of support and resistance as they are reflected through a Fibonacci retracement. I personally don't believe we will see any problems in the market and pricing moving and breaking and closing above, most importantly, 1286 to 1290. That's that critical area. That is the area that has been a thorn, so to speak, in terms of the bullish faction, as we saw the market attempt to break above that recently at the end of April. And that, of course, is right in this area here. At the same time, the fundamentals that are currently at play, I believe, will continue to be supportive of gold. And if in fact there is no resolution over the next couple of days in terms of the current negotiation between China and the United States, I believe we will see gold trade substantially higher and effectively close above this key level. My sense right now in terms of my upside target is if we're looking at a shallow rally, which has been the case. We've had choppy conditions. The next real level that I believe we could find resistance and prices backing off is going to be above 1300. I think it will go through there fairly easily if there is no resolution, is about 1311 to 1312. That is the 0.23% retracement level, and that will factor into our exit strategy. Because as I said, what I'm looking at in terms of this trade is to kind of pick the high price that we think the market could go to and then put a limit order in to get out effectively at that price. If the rally steamrolls through there, we'll re-enter the trade at a slightly higher price. If it backs off, we'll look for a conclusion of the dip before re-entering the market, because I think that the fundamental factors at play are not going to erode very quickly. And I believe that it is quite likely that this current trade dispute or war will get worse before it gets better. Traders, therefore, maintain your current long position, maintain your current stop, and look at that upper level if, in fact, we see a solid close above 1286 as a potential for our exit strategy price target. And traders, lastly, I do want to touch upon one interesting facet in the precious metals complex itself, and that is the fact that gold and palladium prices seem to be destined to go back to parity. In fact, I believe we could even see gold overtake the price of palladium, that according to recent price action, as well as these charts. We're looking at a daily palladium chart currently trading at 1287.30. And with gold trading at 85.40, that being the high, the current is 85.10, we're looking at a scenario in which there's really less, just about $2 between the two pricing. However, the key distinction is not only that they're getting closer and closer in price, but that gold looks fairly bullish from a technical standpoint, as well as a fundamental standpoint. And palladium has had a bearish tendency, with today's price move actually taking palladium below a key level, and that is the 0.38% retracement level at 1288, currently 1287.30, and that is after firming up about $4 in aftermarket trading. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review